Hi, it's Dave Diegelman with Equity Real Estate for the September 2022 marketing update. I'm in a slightly different location right now other than my office, so bear with me as we go through the numbers here. Some interesting things happening. Inventory, of course, is still building up. We are now at in the 1400s. We're actually at 1538 and 1550. Now it dropped down to 1525. But that's a healthy thing. Anything between 14 and 1800 units is going to be a 3 to 4 month supply. And that's a healthy marketplace for us. Listing prices, now it looks as if listing prices are plummeting. And the reality is they're coming right down to, you see this thing right here, the sold median sale price. They're coming right down to a convergence of the two or close to the two. So that's a normal thing, normal marketplace. So absorption rate in months, I talk about this a lot. We're at 3.5 to 4 months right now. And that's a healthy thing again, because what this means is people who want to move out of a neighborhood, maybe they want to move up, down, or sideways. Maybe they want to move to a larger, lot or something like that. They actually have inventory out there to choose from, so they can be more confident about putting their house on the market and knowing that they will find something else. So in the past 2 years, in the crazy market we've been in, that's been a pretty tough conversation because people wouldn't necessarily have another home in line if they put theirs on the market. In fact, it was kind of a negotiation thing that was pretty specialized. But we were able to do it with our clients, but none of it was easy. Now it's easy. Now that portion is easy. So that's why you're also seeing a lot of listing activity come up on the marketplace. Days on the market, and I mentioned this last month, we were around 20 days, and that kind of reflects more of cash buyers because bank loans typically still are going to go through that 3-week period of the underwriting and all of that. But what we're seeing right now is it's jumped up to almost 40 days. So that means we have marketing time. We also have bank loan time. And it's probably because investors probably are pulled out a little bit right now, kind of wary of things. But the reality is if someone's coming in at cash, it's still a great marketplace. If you're coming in with financing, historically it's in a good place, but for the last 5 years it isn't. But we'll look at that in just a minute. The price volume, I want to focus on this again this month because last year during just absolute craziness, we were doing $200 million worth of transactions per month and up to 300 million, but it was hovering around the 2. You can see it right here. And this was, again, the craziest market that we've had ever. I mean, it was crazier in 2004, 5, 6, in that area. But what's happened is we're actually, even though it's on a slight decline here, because it went up to close to 400 million, we're still at the same rates that we were last year, so 200 million per year. So what that means is we have a lot of activity still. We have a lot of purchasers in our marketplace. So again, very healthy sign for a seller. What's out right now is if you have crooked pictures or bad marketing, low commission rates for the buyer's agents, those things are drastically changing because the market's changed. So the summary of statistics is here. And these numbers are, of course, for August because that's when we close out. So even though it's September, I don't have September numbers yet. So sold listings, not a whole lot has changed here, but 500 to 750, we're actually seeing a percentage, a decrease in units that have been sold on the month-to-month basis. That doesn't really surprise me because that number can fluctuate, and we're only working with numbers 110, 152, 51 and 38 in the next category up 750 to 1 million. So this is the one that we're seeing a lot of, again, the numbers aren't high, but surprisingly that's stayed very strong in the marketplace. Overall, both of them year to date change are in the positive. We have positive units, but we're going to see that decrease probably over the next 2 quarters anyway. Pending listings are following the same thing. So sold listings are ones that we know how much they've sold for. Pending listings are on the market, they're under contract, but we don't know how much they're under contract for. But we see we still see a positive growth from the 500 to 750 range, and a very strong positive growth in the 750 to $1 million range, and also a very strong positive growth in the $1 million to $2 million range. So my prediction is that the 1 to 4 or 5 million, anything up from here, these numbers probably are going to be the first that start coming down. And what that means is, if you're looking to buy in that range, and in fact it's already true, more of the houses that you see, there's no way you could possibly come close to building them for what you're buying. So they're actually bargains that are coming up in this price range. If you're looking to sell, it's still real competitive, but it's a good seller's market. We're still in the highest selling market we've had in the last 20, 30 years. It's just that prices are stabilizing. So if you are in that range and you're looking to sell, sooner might be better than later. Active listings, the volume of active listings that we have on the market that are for sale, those are positive and way up. And that's, again, a healthy thing. Now, the properties that are under $400,000, of course, are in a decline because we just don't have that many. New listings coming on the market follow the same numbers, very similar in unit numbers as over to the left, so nothing really new there. Mortgage rates, people ask me about it all the time, so I actually included a mortgage rate chart from nerdwallet.com. Not that I endorse that site, it's just where I pulled it up from, but they go week by week on the different rates, and so that is in the newsletter. Take a look at that. You can see the steady climb of rates, and they do ping pong a little bit. But, we basically went from in July or June, let's go back to April or March. We go back to March, they were at 3.4%, and then at May it went up to 5% or 4.5%, close to 5%. June and July went up and down. You see a little dip in July. And then pretty steadily it's been going up. And as the Fed raised rates, we're probably going to see the mortgage market, bond market, and such follow. But these are the 15 years and the 30 years. So 6.083 is our 30 year, and a 15 year is going to be around 5.19. Of course, this all depends on your credit score. So this is just very generic. And a 5-year ARM, which is kind of an interest-only loan, which I really don't recommend unless someone has to do that and they're going to be in it short term, then it's a great option. But 5.2%, and then all these rates can be bought down, so that's also an option, and that's happening a lot in the marketplace right now. But that's just generally where we're at. We're in a very healthy market. It's a very good time to sell. Historically highest per square foot we've ever had. The market's not as crazy as it was last year. It's a lot more relaxed about finding inventory, not as many multiple offers as what we had before. So from a perspective of stress, this is a much lower stress area. So anyway, God bless you all. Have a great fall season, and we will see you back in October, believe it or not.